we move on to some corporate news. Skye Bank, of course, has released its numbers recently. Skye Bank reported 850% rise in full-year earnings per share to 95 kobo. The Nigerian commercial bank saw revenues increase 25% to 128 billion naira due to an increase in volume of business, but profit after tax was also gained rather 873% to 12.6 billion naira. We have in the studio now to give us some thoughts on the numbers Kehinde Durosinmi, the Group Managing Director. Thank you so much for joining us on the show today. And it seems on the whole, when we look at the year-on-year performance for 2012, very positive, but a lot of analysts are talking about the fourth quarter. We did see some pressure there, particularly for provisions for non-performing loans. I want us to start on that point to get a sense of where the pressure came in the fourth quarter.
Yes, in the fourth quarter, we had to take on more impairments than we expected or anticipated. Some things didn't come through. There were some disappointments, and they were quite significant. And also with IFRS accounting, which we were doing on a year-on-year comparison for the first year, there were other factors that came in, costs on derivatives that we have, and some other fair value accounting that impacted on us negatively. So that reduced our expectations on profit performance.
Can we get a sense of the sectors where you saw this pressure, or was it a one transaction type situation?
No, it's a bit varied. It's from maritime, from downstream oil and gas, still a bit of pressure there, and general commerce.
Okay, and as a result, the return on equity guidance that you give, the company has fallen slightly below that, and I want to get your thoughts on going forward. I imagine that this is a one-off situation, but what can we expect in 2013 in terms of guidance on that front?
Yes, our guidance for 2012 was about 15%, and we've come in at about 12%. And for 2013, we're looking at between 16 and 18% for guidance.
All right, well, we'll see how things play out. But moving back to the results, I think another, if you like, pressure point there will be interest cost. And I know we've been in a very tight monetary environment. I imagine that that's part of it. But can you just talk us through the pressure on that point as well?
Well, you know, Skye Bank is a big, small bank, or mid-sized bank, meaning we have a big balance sheet and a small capital, which we use to support this. And regulatory pressures mid-year impacted on us fairly negatively on our interest expenses. So that impacted on us in that way, and ultimately the bottom line. So we were going around trying to get in much cheaper funding costs. The funding is not a problem. It's just that for the size of balance sheet we carry and the capital support, that it's something that that grows basically over time. So the products are there, and we're getting cheaper deposits, but that's something that you work your way through.
So you made a point about capital in the context of your business. Would you be raising any more capital this year, perhaps?
Definitely, we'll be raising a significant amount of capital this year. We've always raised very little capital to support our business, but right now we're very confident and believe that we should ramp up quite significantly this year. So we will be raising, we did some Tier 2 capital last year. We will be raising about $150 million of Tier 2 capital between second and third quarter. These are coming mainly from European DFIs, and we should be looking at a Tier 1 offering as well.
A Tier 1 offering, would that possibly be an equity offering? I think a lot of people are hoping that we'll get this IPO market back in Nigeria, but is it likely to start with Skye Bank this year?
Well, we should do an equity raising, so that's all I can say for now until I have my approvals for it.
Right, we look forward to that. Okay, now, of course, something that's also putting some earnings pressure on banks generally is the new central bank cap on commissions on transactions. Your thoughts on how this is likely to impact your business going forward?
Well, it would impact on business. I mean, it would shave off fees and commissions, basically. But I mean, we and I believe the banks and we have the resolve to go out there, broaden our base, and look for alternative ways of making up this income, either growing the business a bit more aggressively or looking for new fee and income lines that would compensate accordingly. So yes, the pressure will be there, but it's not too significant. Fees and commissions account for about 20% of our of our earnings, and the pressure would only be on about 5%. So from a statistical point of view, that is not significant.
So not too significant in your view. Okay, let's talk a bit about some of the definite positives there. We saw you ramp up deposits 20% over the year. We saw loans up about 11%, and given where your loan to deposit ratio is right now, one will expect that for you to grow that loan book a little bit, you need to ramp up deposit further. So going into this year, can you talk us through your expectations for loan and deposit growth?
Deposit growth will be about 20% expectations. Loan growth is about 15% for this year.
And what is going to drive, particularly the deposit side? We know that very few banks are branching out more, building new branches. I think it's more of trying to get the best out of the branch network that you currently have. Is that the same approach that you are taking?
We're building a few branches because we still need to continue on our penetration. So that we're doing right now. We need to be able to get to our customers and provide the services locally to a good range of our customers. But we're investing more in electronic channels as well.
Right.
So because that's where a lot of our business is going through now. But you still want to have a presence. So we're investing in brick and mortar as well.
And on the loan book side, can you talk us through how you are addressing that point? Because a lot of people have talked about the fact that banks are not lending to the real sector, they're only lending to SMEs. I mean, what's the Skye Bank's position on that? What's your approach to that?
Has always lent significantly to the real sector and also SMEs, because SMEs is a bedrock. We've always lent aggressively to the real sector, and we've also lent to the very middle part of the market, and we've also done a lot of difficult projects, and hence in the past and to a large extent the level of impairments that you would see, because they carry a higher risk.
Of course.
And you know, so you would
Are you staying with that strategy going forward? Is that something you're going to tweak?
We've tweaked it in the last couple of years. We've up-tiered, and you know, the results are coming through better. And also we've put in better and stronger risk management practices, so that even if we're going to stay in the very middle of the range of the market,
yeah,
we would be sure that we get the money back when we lend it.
Right. Funding pressure, of course, it's something that's impacting everyone given the tight monetary policy that we have right now. Your expectations for monetary policy over the course of this year, I think a lot of people calling for a cut, but of course, given the recent pressure we've seen on the Naira, I think a lot of people think that the MPC will be hesitant to do that, say, in the next few meetings. But your thoughts on the likely direction of monetary policy this year?
It will remain tight, and the central bank would maintain a proactive stance, whereby using open market operations and cash reserve where they have to, would move to defend their objectives, their policy objectives. So it may go down if they feel that the pressures are no longer there and they can sustain a downward lower level on cash reserve, on interest rates and all that. But they would not hesitate to raise the rates if they have to. But I feel that they're on top of their game. They've got the stability they want, and they're comfortable where they are.
I think a lot of people think, if anything, they're going to bring down rates. But do you think it's possible, given the context of where we are now, given where oil prices are, given oil production, do you think it's possible that we see a rate hike this year?
Like I said, if on the fiscal side, a lot of monies are coming in and there's a lot of unwarranted spending that the government, the tiers of government are getting involved in, then they would raise rates.